Final accounts with adjustments. Yes, we have reached to the final accounts with adjustment. It means that we are almost done with the basic accounting. So here we will be learning how to prepare financial statements of a sole proprietorship or a sole trader. Okay. So in this, we know that a small organization, sole proprietors are normally small organizations. So small organizations, they do not prepare all the 5 components of the financial statements that we have already discussed in earlier modules. They simply prepare income statement and balance sheet. Okay. When we say income statement, this income statement in fact based on an equation which is incomes minus expenses equal to profit. Okay. And when we say balance sheet is in fact based on an equation which is assets are equal to owner's equity plus liability. Okay. So income statement in fact gives us financial performance of an accounting period. When we say accounting period, that can be a month, that can be 6 months, that can be a year, or more than a year. The thing is that normally we prepare income statement for one accounting year. All right? And when we say balance sheet is prepared on a specific date. At the end of that year, or at the end of that month, or on a specific date. So there is an analogy that we can say that profit and loss account or an income statement is just like you are capturing or making video. Okay. Whereas balance sheet is that you are capturing still. Okay. As on a date, you are just taking a still photograph. All right. So this is the analogy that we give for income statement and balance sheet. In income statement, we look into that year from the day 1 till the last day, that how much is our income, how much is our expense, and then we get our profit. All right. Well, so the techniques to prepare income statement and balance sheet is, number 1, read the trial balance very carefully. You should know that what this trial balance is containing in it. So read the trial balance very carefully. And there is a technique that we have to mark each and every item in the trial balance with AEILO. What is this AEILO? Yes, this is a mnemonic. You can say AILO. Okay. So this AILO means that we have to mark asset, A for asset, E for expense, I for income, L for liability, and O stands for owner's equity. So mark AILO in the trial balance. It will give you confidence that you know what is in the trial balance. Okay. If you have rightly identified these AILO things, then there will be lesser chances of mistake in preparing your income statement and balance sheet. Okay. Good tip. Well, then pass journal entry for the adjustments. Because the adjustments are the other information which is given beyond or outside the boundaries of the trial balance. Within the trial balance, we get information for which we have already done accounting or bookkeeping during the year. We have prepared books of accounts. We have posted those books of original entry items in the ledger accounts. And from those ledger accounts, we have extracted a trial balance. But at the closing date, before preparing the financial statements, there are few issues which have remained unrecorded. Few accounting phenomena means the adjustments in the already recorded financial information are left, for which we have to do debit and credit. These are known as adjustments. And by the way, if you do remember, in the very beginning of our basic financial accounting concepts, we discussed that there are three sources of financial information. Yes, transactions, events, and conditions. For these conditions, at that stage, I told you that time will come when we will discuss what are the conditions. These adjustments are the conditions, in fact, for which we need to do some adjustments in already recorded financial information. Okay, so already recorded financial information is appearing in the trial balance. Their balances are appearing in the trial balance. And the adjustments are requiring debit and credit, which will affect the already balances which are already appearing in the trial balance. So we have to pass journal entries for each adjustments, and then those adjustments we have to place adjusted balances in the appropriate statement, means the income statement and the balance sheet. So those adjustments will affect the balances. Then we will extract an adjusted trial balance, or if you don't want to prepare adjusted trial balance from scratch, at least we will amend the balances of those ledger accounts for which adjustments were made, so that the adjusted balances will then be taken to the income statement and balance sheet. Got it? Very well done. So the important tips in this module are that mark ILO. Okay? You got ILO? Well, so mark ILO, and then debit side of trial balance contains assets and expenses, the first two parts of ILO. And the credit side of trial balance contains, yes, I for income, L for liability, and O for owner's equity. So these you will find in the credit side of the trial balance. And then take special care of the contra nature of accounts. Those would be appearing in the trial balance, but in the opposite side. For example, drawings, these are contra to capital. Although these are credit, owner's equity item, these are owner's equity are credit in nature, but this drawing would be appearing always in the debit side. Okay? Purchases return, these would be contra to the purchases, always appearing in the credit side of the trial balance. Sales return, contra to sales, would always be appearing in the debit side of the trial balance. Provision for depreciation, contra to the fixed asset, would always be appearing in the credit side of the trial balance. And provision for doubtful debts, contra to the debtors account, would always be appearing in the credit side of the trial balance. So take special care of the contra items. Thank you very much. We'll see that how this adjusted financial statements will be prepared in the upcoming module. Thank you.